the PDT hack. The objective of the PDT hack is to prevent you from having to use a day trade when you want to exit your trades. You can say, I got a good thing going here. Maybe you found a good run, you good in profit, but it's 10 o'clock in the morning and you're 10:30 and you're like, I cannot watch this for 5 more hours, watch and worry for 5 hours. So we can use the PDT hack to lock in that profit. Or if the trade's not going your way throughout the day, something happens, the trade doesn't go your way or howsoever, you can use the PDT hack to close off a trade that is not going your way, and it'll reduce your loss, because max loss is whatever the difference is, where I was talking about $45 was what you collected and you were putting up $455 of collateral. Max loss is to lose the other $455 if both of your strikes are breached. So in order to lock in profits or to minimize your losses, we use the PDT hack, and you're saving yourself a day trade. Nobody wants to lose money and lose a day trade. Not if you don't have to. Losing the money, we can get them day trades harder to come by. And them people now talking about, if you become a pattern, if you get pattern day trader designation, that it's not falling off in 90 days like it used to. Used to be you got PDT, they gave you 90 days of no trading and you basically had to just wait. But now Robinhood is talking about, I'm not sure if the other ones are, and they probably will, because I'm sure I can't see Robinhood doing something other people aren't doing. But if you get PDT, it stays there. So entry times for PDT hack. Most people use it for profits in the morning. You're going to get in while the volatility is high in the morning. Many of our students, our little traders, are using it in the morning. Afternoon usage is generally to lock in a smaller loss. I've not heard too many of us talking about using the PDT hack in the afternoon, because by that time you're in your trade, you got it locked. If you're looking at PDT hack in the afternoon, it's because you're trying to defend and lock in a smaller loss. Here's the steps. You still want to chart your support and resistance. Everything comes down to the chart. That's why we always start there. You want to decide whether to do a put credit spread or a call credit spread first. You want to go with the trend. On your first entry, you want to go with the trend. If the price has hit resistance and it's coming down, then you want to do a call credit spread first. If price has come down to support and it's now starting to go up, then you want to do a put credit spread first. If the market opens and you feel like it's going to run up for a minute, then you want to do, again, put credit spread and then put the call credit spread on next. But you want to go with the trend. Whenever it is you're getting in, you're going with the trend. You want to enter the first trade at the money or beyond support or resistance. This is kind of a personal preference. Saeed is going to talk about this here in a minute. But you can enter at the money or beyond support and resistance. At the money, you're going to receive more in premiums, have a little less in max loss, but you also are into, closer to current price. It sometimes gives you a greater opportunity for your PDT hack to pick up, because you don't have to go as far to get to the premiums you want. But that's a little bit more risky because you're at the money, and if the price turns around on you quicker, then you got to manage that, right? So it's again, personal preference, personal trader preference. You either can do at the money or, below support or above resistance, depending on where you are. For example, you can do a 36.45 put credit spread, take in a premium of 210, which is a max loss of 2.9. I want to talk about premiums and max losses. So, because that's going to be part of the math that you need for putting your PDT hack on. If you receive 210, you take $5 or 500 and subtract sorry, you take the $5 and subtract the 210. That's what gives you 2.9 as your max loss. Okay, that's how we determine max loss. It's the difference between the spread, which is a 5 spread, and the 2.1. Not really, but there's a box we use. I'll show you an easy way to do it here in a couple slides, Christian. Premium you take in 210, max loss $5 minus that is 2.9. That's your max loss. Okay. You want to decide what profit that you want. If you want $25 or $50 in profit, this is where I'm going to encourage you once again to not get greedy, because price has to move enough for the premium to move $50 worth or $25 worth. It has to move enough for you to get those premiums, which is why if you're at the money, you're getting a higher delta, so the price is growing or losing faster, which is why sometimes the PDT hack picks up faster if your first trade is at the money. But there's a trade-off. The second trade might pick up faster, but if it goes against you, it's also going to be losing faster. So you gotta, that's for experience will help you there. Then you want to go to the other side. So the first side was PCS, put credit spread. The second side is going to be the call credit spread. You want to select the exact same strikes. Exact same strikes. Now you're doing call credit spreads. You want to add your desired profit to the max loss of that first trade. And then input, so in this case, max loss was 2.9. If we say we want $25 profit, we're going to add $25 to that, and we end up with $315. This is your new limit box, or what you're putting in the premiums box if you want to lock in a profit of $25. This is your second trade. You're putting input 315 in the limit box for the call credit spread side. If you want to take in $50, then you're putting 340 in the limit box. Okay, I'm going to show you these things, and with the box, Jamie designed a box for us to use, and we're going to talk about, you'll show you how to use that for your math here in a minute. If you do the call credit spread side first, if price is coming down, you want to do the call credit spread side first. I picked some numbers randomly, right? We've got 3,600, 3,605 call credit spread. You take in a premium of $1.50. That's a max loss of $350. 500 minus 150 is $350. Decide the profit you want. Go to the other side, pick the exact same strikes and do a put credit spread. Add your desired profits to the max loss. So you take your $350. If you were adding $25 of profit, then you would put $375 in the limit box on this second trade. You put this order in and it's working. These orders are working until they get filled. Sometimes they fill faster than others. You may have to watch a while to make sure that it picks up. And sometimes it'll get right to your strikes and right to your price and dance around. And you're like, Lord have mercy, just pick up already. Well, it's got to get, two legs have to equal what you're looking for in order for the trade to fill. Sometimes it takes longer than others. And if price is dancing around, or if there's a lot of volatility, it may take a little longer for your trade to fill. Here's the box I was just mentioning for the math of the PDT hack. The math of the PDT hack. Okay, so your first trade you put on, I'm going to use the numbers we just looked at. We had a call credit spread we did first. We did a call credit spread first. We collected, what did I say, $1.50. I think it's on the next page actually with the numbers. Our max loss here, 500 minus that premium gives you 350. I have the what goes in each box even over to the right here. Looking for the profit you want, you're going to then, let me change this color because I want you to see what's happening here. You're going to add your desired profit here. Let's say you want $50, and you're going to put $4 into the PCS trade. Going to go second trade, put credit spread. You're going to put $4 in the limit box. This would then be a max loss of $1. This is going to give you a profit of $50. It says down here, if box 3 is higher than box 2, that is your profit. If box 3 is less than 2, then that is your loss. It's the difference between these two. The second trade has to be higher for profits. If it's less than the max loss, then it's loss. I'll take a screenshot of this and make sure that we put it in a place where y'all can get it. I think I put all the numbers in this next slide, even though I just wrote them in there. Box number 1 was the premiums. Box number 2 was the max loss for that trade. Second trade, you added $50, got your $400, and this is 400 minus 350 is $50 profit. Again, our note, if box 3 is higher than 2, that's your profit money. If it's less than that, then that's loss money. And you'd rather have less than max loss if you can, avoid it at all. That's why we're using the PDT hack to avoid max loss. Real quick, I just wanted to come on. This is Arlissa, Educator to Trader. Wanted to come on and tell you and ask you, I guess, to like and subscribe to the channel. If you like the content that I create and I'm, posting regularly, then go ahead and subscribe. That way you won't miss anything and you can be a part of all that we're doing here. I'm a coach to sellers. I'm an option sellers coach. If that's a vein that you don't know anything about or you want to know more about, then go ahead, subscribe and check us out all the time. All right. Thank y'all. I appreciate it.